This is a critical alert for every investor watching, because what's happening right now between gold, bonds, and XRP is not random volatility. It's the quiet fusion of the world's oldest safe havens with the world's fastest one. Stay locked in for the next 45 seconds, because what I'm about to show you isn't theory. It's real data from the liquidity corridors that have already gone live behind the scenes. In the last 72 hours, gold didn't just tick higher. It shattered through the $4,000 mark for the first time in history. Bond yields cratered as capital fled to safety. And XRP, the asset designed to move value instantly, plunged to $1.52 before ripping back over $2.10 in minutes. Those aren't disconnected events. That's global capital migrating, testing the rails of a new system that links tangible store of value assets like gold, income-producing bonds, and frictionless settlement assets like XRP. Quick note before we go further, make sure you like and subscribe so you don't miss the next major update when this fusion becomes public policy. Every subscriber here is part of the movement that's seeing this before Wall Street admits it's happening. This is not financial advice. Always do your own research and consult a qualified professional before making any financial decisions. At the time of recording, XRP is trading around $2.37. Prices change. What doesn't is the pattern. Because when you zoom out, you realize that for the first time ever, gold, bonds, and digital liquidity are breathing in rhythm. Here's what's really going on. The spike above a $4,000 gold wasn't just fear. It was confirmation that the global trust system is cracking. When investors no longer trust currencies or central banks, they rush to gold for preservation, bonds for stability, and now XRP for mobility. Together, they form the new financial trinity, the assets that will underpin global liquidity once legacy clearing systems become too slow to keep up. That tariff-induced sell-off you saw, it was a stress test. Equity markets puked, bond desks flooded into T-bills, and ETF creation desks had to unwind billions in baskets. Liquidity didn't disappear. It rerouted through tokenized settlement channels, gold on one side, bonds on another, XRP in the middle. This is what institutional adaptation looks like. Each time the world trembles, the pipes connecting traditional and digital finance expand. Panic at the surface, precision underneath. Older investors have seen this movie before. In 1971, it was the end of Bretton Woods. In 2008, it was the global credit reset. Each time, volatility was the signal that the system was evolving. This cycle is no different, only faster, cleaner, and running 24/7. And here's the part most analysts miss. When capital moves this quickly, the speed of settlement becomes the new yield. Gold stores value, bonds define it, XRP delivers it. The faster those three sync, the more valuable the entire network becomes. If you own gold, bonds, or XRP, you're not just diversified. You're positioned across the three pillars of the next global monetary framework. The question now isn't if they'll connect, it's whether you'll still be holding when the rest of the world realizes they already have. If you just felt the spark, this is the wiring underneath it. When global markets shake, liquidity doesn't vanish. It reallocates. And right now, that reallocation is running through the same set of emerging tokenized corridors that quietly link gold ETFs, sovereign bonds, and XRP settlement rails. Here's how the machine operates. When volatility hits, like this week's $4,000 gold breakout and treasury yield collapse, ETF desks and custodians have to rebalance their portfolios. They redeem and recreate billions in fund baskets every day. Normally, that cash sits idle in clearing accounts for up to 48 hours. But as more custodians tokenize collateral, that idle value can now move instantly. That's where the trinity forms. Gold anchors store of value, the collateral leg. Bonds generate yield and act as balance sheet ballast. XRP bridges the two in real time, shuttling liquidity across jurisdictions. Think of it as the bloodstream of finance finally being connected end to end. Gold is the red blood cell, bonds are the oxygen supply, XRP is the heartbeat pushing it all through the system. This is why we saw XRP's violent move from $1.50 to over $2.10 within minutes, while gold surged to new highs. Those were not retail trades. Those were institutional liquidity valves opening and closing, pressure equalizing across a new, unified infrastructure. And yes, you can actually see this in real time. A lot of people ask me where I track these moves, because by the time mainstream media covers them, it's already over. Honestly, I use MEXC. It's the one exchange that gives me a clear view of institutional footprints before they show up anywhere else. I'm not sponsored. It's just the tool I use daily because I can literally watch liquidity corridors open as gold and bond markets shift. You'll see volume spikes before headlines. That's how you stay early in this game. If you want to explore it, The link's in the description. No pressure, just what I use to watch the pipes in motion. Now let's connect the dots. When ETF custodians tokenize bond tranches and gold reserves, they create digital representations that can move across distributed ledgers. XRP isn't competing with those tokens, it's settling them. That's the part the mainstream still hasn't grasped. XRP is the invisible glue between asset classes, the translator that allows instant settlement between stores of value and sources of yield. That's why this week's volatility was a function, not a failure. Liquidity moved, the system flexed, and price oscillations were the exhaust fumes of something far bigger. A new kind of balance sheet architecture coming online. The reality you understand is that you can't out-trade these flows, but you can out-understand them. Once you realize every shock is just a liquidity handoff between gold, bonds, and XRP, you stop panicking and start positioning. If you're enjoying this breakdown, make sure you like and subscribe right now. It helps push this message to people who are still playing checkers while institutions are building chessboards. Every financial revolution has a phase where the public panics and the institutions prepare. That's exactly where we are right now. When XRP plunged to $1.52 before rebounding above $2.10, retail saw chaos, but the smart money saw calibration. When gold ripped past $4,000, the crowd screamed bubble. The institutions called it proof of trust failure and started quietly accumulating bridge assets that could settle that gold instantly. You can see it if you know where to look. Exchange-held XRP supply continues to drop while cold storage custody wallets swell. That's not traders chasing pumps, that's custodians securing throughput capacity. They're not speculating on price, they're preparing for flow. Think of the market like a single-lane bridge again. When the heavy trucks, the ETFs, sovereign wealth funds, and central banks start crossing, smaller cars have to pull aside. Prices dip, traffic slows, retail panics. But once those trucks finish their move, the bridge clears and the flow stabilizes. That's what last week's price action really was, the bridge adjusting to a new weight class. This is the part most people never understand. Volatility is not manipulation, it's maintenance. The system breathing under stress, the rails being tested before they're trusted. And while retail investors chase headlines, whales read behavior. They buy fear. They anticipate regulation. They understand that when the old system starts to strain, the new system inherits the load. That's why during every shakeout, liquidity moves upstream, from emotional hands to strategic ones. Look at what's happening across the macro spectrum. Central banks are quietly increasing gold reserves. Pension funds are extending bond duration again. Custodians are experimenting with tokenized settlement pilots on private ledgers. Each action reinforces the same direction. Concentration, not fragmentation. Every cycle of fear transfers ownership to the patient. And this time, the ownership isn't just of assets, it's of infrastructure. Whales don't want exposure to XRP for its chart. They want access to its corridor. They're positioning for flow, not hype. Every red candle isn't destruction, it's calibration. The market is teaching itself how to breathe under institutional weight. The few who recognize that rhythm, who can stay calm when the bridge shakes, are the ones who'll own the rails when the rest of the world realizes what's been built. So next time the screen turns red, don't panic. Pay attention. Ask yourself not who sold, but who bought. Because that's where the future hides, in the hands of those who understand the system better than they fear it. Stay with me. Because in the next 60 seconds, we're zooming out to the macro view where everything converges. Gold, bonds, and XRP fusing into the single most powerful liquidity network in financial history. Zoom out for a second. The story isn't about crypto or commodities or bonds anymore. It's about liquidity itself. Rates are topping out, inflation is cooling, and the world's capital is rotating from speculation to structure. Gold over $4,000 proves trust in fiat is breaking. Bonds stabilizing at record demand prove investors are desperate for safety. And XRP's survival through every liquidity shock proves it's built to move that safety. What we're witnessing is convergence. Gold is the vault. Bonds are the income stream. XRP is the wire connecting them in real time. Together they form the first self-balancing financial network, one that doesn't rely on overnight settlements or clearing delays. The rails are already being tested, and the volatility we're seeing isn't a glitch. It's a stress test, the system flexing before it goes fully live. When the switch flips, you won't see fireworks, you'll see silence, because the new financial grid will already be running. Gold, bonds, and XRP will be transacting together, invisibly, beneath a market that still thinks they're separate. Strap in. Because the next XRP move won't be a warning. It'll be confirmation that the global liquidity network has gone online. If you believe in truth over noise, If you see where this is heading before the headlines do, make sure you like and subscribe. Every subscriber here isn't just watching history. You're part of the awakening of the Matrix movement. See you on the next one, my friends.